welcome to the third quarter briefing of SM Investments for 2013. It's going to be an explosive day. We have Janet Napoles in the Senate, a big typhoon is coming, but we're still here presenting before you. Now, I'll be introducing the members of the panel. No need for applause, please. We have our President, Mr. Harlisi, our CFO, Mr. Joe Shaw, and beside Mr. Joe Shaw is Jeff Lim, CFO of SM Prime. And then we have Mr. Jojo Mendiola, President of SM Department Stores, Mr. Joey Mendoza, President of SM Supermarkets. We have Chito Reyes, Investor Relations Officer of BDO, and Mr. Alex Escucha, the Investor Relations Officer of China Bank. So what I'll be doing this afternoon is to present the third quarter results of SM Investments, and then I'll be also inviting Mr. Jojo Mendiola later to show you just a few slides on the department store, and also Chito Reyes to discuss a little bit more about the banks because they're having quite an extraordinary year. Okay, so in terms of the consolidated results of SM Investments, our revenues actually increased by 15.4% to 183.1 billion pesos, while net income increased by 14.2% to 18.5 billion for the 9 months of 2013. The growth drivers were obviously the bank, especially BDO, which Chito later on will be discussing with you, which is actually related to the trading gains they've had since the first quarter of this year. And then followed by the property group. We now call it the property group because we're about to really consolidate everything. No? The malls delivered 20.4% to our consolidated profits, and property, mainly housing, delivered 12.3%, while retail delivered 18.8%. Okay. Net margin is relatively steady at about 10%. Our balance sheet continues to be very healthy and very strong. If you look at this ratio here, the net debt to equity ratio, our net debt is only 33% of net assets, and if you compare that with the equity, which is 67% of net assets. Okay. Now going on to retail. Okay. In terms of total sales, that increased by 13% to 125 billion pesos. Net income had a slight decline of 1.3% to 4 billion pesos. Largely because of certain margin pressures that the food retail business is experiencing due to increased competition, particularly in Metro Manila. Return on equity is about 44.7%. Now this year, they added a total of 15 stores so far, 1 department store, another supermarket, 11 Save More stores, 1 hypermarket, and 1 Walter Mart supermarket. So the total now is 47 department stores, 38 supermarkets, 89 Save More stores. This came from literally nothing 5 years ago. So this has been the fastest growing segment. And then 38 hypermarkets, also a fast growing segment for the food retail business. And 21 Walter Mart stores, which is the newest addition in terms of the different store formats that they have now. Let me now call on Jojo Mendiola to just talk a little bit about the SM store.
Okay. As Cora said earlier, you refer to us as the SM department store. Actually, we're doing a brand refresh today such that we are now called the SM store, no longer the SM department store. Because the SM store represents our pursuit of the store within a store concept in line with our core proposition of being a fashion store for all. In terms of store design, we're doing a lot of upgrades. We're renovating a lot of our stores. so that we can redefine the customer shopping experience with the new modern store designs that maximize selling area as well as consolidate manpower resources. In terms of our portfolio development, you can see, probably notice that since we opened Aura and last year, we have a lot of brand ambassadors, no? Like in SM Accessories, you have there the Gutierrez. And then for the shoes, you have Casey Concepcion and the rest, no? So that we can really build a strong portfolio of private labels for our various segments, no? Targeted marketing. We are very heavy now on marketing. The most current one for the last quarter is 120 VIP travel packages to Resorts World Sentosa in Singapore. This is in partnership with MasterCard as well as Resorts World Sentosa. Year to date, we're growing 5.2%. Our comp stores at 2.7%. What are the challenges? In the third quarter, of course, it's the habagat storms in August, the fewer payday weekends, and then the 3-day sales schedule from September to October. And what are the opportunities? Of course, the 3-day sale in October, which really delivered, and the aggressive marketing push, and the strong remittance growth that we are currently experiencing. In terms of operating highlights, Provincial before had 27 branches contributing 46%, and Metro Manila 54% with 19 branches. Currently, Provincial is contributing 47% and Metro Manila at 53%. That's it, thank you.
If I may just start with a recap of what we showed last time. We ended June with a 14 billion net income. And for us, the main drivers were our net interest income, our recurring fees, and of course the trading and FX gains that contributed a large component of our income in the first quarter. So those were the three main engines of growth for the bank. Now for the September performance, we ended with an 18 billion net income. This is 73% higher compared to last year. And for us, the main drivers as follows. Loan growth, if we look at this latest number, 17%, from a 12% growth in June, we've seen an acceleration in our loan portfolio to a 17% growth, which is slightly above the system number. The new contributor also to our income growth is deposits. We saw an acceleration likewise to a 40% year-on-year growth to our current level of 1.2 trillion. And what's contributing to this, see what we call the liquidity floodgates coming from the SDAs. We estimate that about 1.2 trillion of the total SDAs are bound to find a new home, whether in trust, whether in bank deposits, or in other asset classes. And that is what we expect will gradually move out of the central bank between July and November of this year. So we've seen some of that coming to the system since as early as June, and I think the bulk will show itself in the September balance sheets of banks. As in our case, 40% growth in September alone. The good news, though, is that net interest income continues to grow well for us. In fact, it has accelerated to 18% in September, coming from 16% in the second quarter. So despite all of this money coming to the banking system, somehow we're still able to deploy it and show it in terms of an improvement in our growth in net interest income, which is still the main component of our operating income. The other contributor is fee income. So for September, it's showing steady growth at close to mid-teens, 13%. And again, this is coming from our recurring service businesses. What's contributing to both the NII and the fee income growth? First, branch expansion. We opened a total of 38 new branches so far this year between Metro Manila and the provincial areas. On top of that, we've added close to 300 ATMs. So that's helping us grow our market reach. That's helping us reach out to new clients. In terms of other banking channels, we've also introduced a mobile banking app as another way of providing access to our clients. And this will help improve, likewise, their ability to do more transactions, not necessarily through the branch, but through new channels. So in terms of looking at our growth in operating income and expense, what we'd like to highlight is if you look at the trends over the last few years, the trajectory of operating income, which is the upper line, is at a higher trajectory compared to the growth in our operating expense. And what this implies is that over time, we're seeing an improvement in the bank's profitability. As this gap between the growth in operating income and expense widens, then that translates into higher profitability moving forward. In terms of asset quality, NPL ratios remain stable at 2.4. And despite that, we've continued provisioning such that our coverage ratio is now at 152%. I think this, based on the last numbers, this is still the highest among our peers. And lastly, in terms of capital, as of September, our capital ratio is 17% as against the 10% minimum. And looking at Basel III, January next year, this is where we see our capital at, about 16.3%. So we are ready for Basel III. We have the capital and we're prepared for it. So to summarize, we see strong earnings coming from the positive performance of our core businesses. The net interest income as the main driver is showing 18% growth coming from the acceleration in both loans and deposits. Fee income maintaining its double-digit growth. Operating expenses maintained at single-digit levels. This is actually lower than our historical trend of 9%. And lastly, our capital position is Basel III ready. Just a short update on the corporate social responsibility side. We have conducted relief operations for the victims of the recent typhoons through our BDO Foundation. We have what we call a BDO volunteer program where bank employees participate in activities such as these. So in terms of helping out the victims of the recent typhoons and the Zamboanga siege, we did our share by trying to help by distributing relief goods to them. Same for the earthquake victims in Bohol. And we helped rehabilitate a national high school in Tanay Rizal, Sampaloc National High School. And in fact, BDO Foundation has been awarded the Best Employee Engagement Strategy. Lastly, in partnership with SM Foundation, we have helped establish main health centers in certain provincial areas as a way of trying to improve healthcare in that locality. So that's our update for BDO.
China Bank hasn't really reported their earnings yet, so I won't be calling on Alex to report on China Bank. But maybe later on we can ask him about developments on the merger with Planters Bank, no? If he has anything to say on that. Now, let me just run you through the property merger in terms of the update. Okay, last May we announced that SM and the rest of the property group will be merging the companies and assets, and put them all in SM Prime. So far, as of October 10, we received the SEC approval, and we're now just really, or SM Prime is just really in the final phase of their consolidation. Now, having said that, let's all congratulate Jeff Lim and the whole team for doing a very smooth merger process, no? Let's give them a big hand. It's really very hard work, for all of them. So congratulations, Jeff. Now, this is what they've done so far. They've done tender offers. They've done share for swaps. But anyway, this is what's going to happen, no? So all of this will now be under SM Prime. And this is what it will do to SM Investments as the holding company. From a 5-core business holding company, it will simplify our corporate structure into just having 3 core businesses with property all under SM Prime. And instead of, in the previous slide, you see that we own 48% of SM Prime in this structure. because of the asset swaps, we will now be owning 51% of SM Prime. And everything else falls under SM Prime as wholly owned companies and assets. So these are the different core businesses in turn of SM Prime being now a property holding company. It will have shopping malls under SM Prime still, and then residential business under SMDC, more as a private company now. It's been delisted. The commercial development as well under SM Land, where you also have Mall of Asia Complex as one of its assets. And then hotels and conventions, and then leisure and resorts, where you have Highlands Prime also being privatized, and Costa del Jamilo. Okay. On a pro forma basis, this is how their their stats will look like, where revenues, 55% of revenues will still be coming from malls, and 35% from residential, and the rest will be from the growth companies. These are at the very early stages of growth. And then in terms of net income, you have 68% from malls and then 26% from residential. In terms of total assets, 56% is contributed by the malls, where they have over 40 or nearly 50 malls now, and 30% from residential. Okay. Now, moving on to the mall operations. For the 9 months, their revenues increased by 12%. Okay. To, let me see, over 20 billion. They didn't put the total here. But anyway, net income also grew by 14%. No? The margins increased to 34% from 33% last year. And ROE is now at around 15.5%. Just like the parent company, SM Prime maintains a healthy and very strong balance sheet with a net debt to equity ratio of 48:52. Okay. I think on the consolidated level, their net debt will go down further because most of the assets that were transferred to SM Prime are actually ungeared. So I think there will be a very sharp drop in their net debt levels. Now, in terms of the malls that they have in the Philippines, 17 are in Metro Manila, of which the GFA accounts for about 51% of total capacity. Luzon, outside of Metro Manila, has 22, and 32% of their GFA, they contribute 32% of total GFA. So you can see that Visayas and Mindanao still has a lot of growth areas, and this is where actually SM Prime will be focusing on in terms of growth in the future. Now, this year they have so far opened SM Aura in Taguig, and they're about to open SM BF Parañaque. They will also be opening the Building D of SM Mega Mall, both in time for Christmas. Okay, so, as I mentioned before, Building D will expand Mega Mall to become the largest mall in the Philippines this year. So with all of these new capacity, their total GFA will be increasing by 8% this year to 6.3 million square meters. Next year, they're looking more outside of Metro Manila, with plans to open in SM Kawayan and SM Angono, with over 100,000 square meters of space. And then they are expanding Bacolod and Lipa. Okay. So there's constant expansion of existing malls. I think you will see this more and more from SM Prime, where there will be a mix of new malls and the expansion of existing malls. So by next year, by end of next year, their GFA will be around 6.6 million square meters, increasing by 5%. Their estimated capital expenditure for next year in the Philippines is 23 billion pesos. Okay. SM China has become very, very profitable, especially for the mature malls, Xiamen, Jinjiang, Chengdu. And these are contributing net income of net income of 588 million pesos, no? And this increased by 21.5%. So you can see the growth is very strong. And actually, there's new capacity that's still in gestation, so you can expect more and more growth from China. But there will be a very big capacity coming on stream, especially in 2015 when they open Tianjin, no, with 540,000 square meters. That's going to be as large or just slightly larger than Mega Mall when Building D opens. Next year, they're opening Chibo with 154,000 square meters. Okay. In terms of residential development, the revenues of SMDC declined by about 5.7% to 15.2 billion pesos, and net income was relatively flat at 3.3 billion pesos. Net margin, slight increase there from 20.3% to 21.6%, showing, sort of implying that their cost is much lower than, it has grown slower than revenues. Again, as it is with the group, their balance sheet is very strong, actually even stronger than the mall business, with their net debt to equity ratio of 31.69. And this is one of the reasons why on the consolidated level, when you see the pro forma, the balance sheet of SM Prime overall will actually strengthen. Okay. Now, so far, since they started selling units in 2005, it's unbelievable that this company has grown just since 2005 and has become one of the most dominant players in the housing business. They've so far sold 55,800 units, and that accounts for about 81% of their total inventory. New units they have launched this year is about 10,600 units, and they have sold about 6,400 so far this year. Okay. Now, their capex plan for next year is 20.2 billion, of which 7.3 will actually go into land banking. They have quite a bit of land for now, of which 30.7% is in Metro Manila, but they have to continue replenishing as they develop these assets. These are the completed projects, and the ongoing projects are about 14 of them. 5 in Quezon City, 1 in Makati, 1 in Mandaluyong, 1 in Pasig, and then Manila, Pasay, Parañaque, Taguig, and of course in Tagaytay. Now this year, they have new projects. Trees and Shore, I think, will still be launched later this year, no? And these will be the ones that will provide an extra boost to their future revenues and income. And Grass Phase 2. Okay. While they're also expanding some existing projects or ongoing projects in Tagaytay, which is called Wind, and then Field in Parañaque, and Grace in Taguig. Now, in terms of commercial development, again, these assets have been transferred to SM Prime. We already have 1 and 2 Ecom in Mall of Asia Complex, and we have some smaller BPO-related buildings in Baguio, in Makati. And for now, the existing leasable space, or GFA, is about 256,700 square meters. But once 3 Ecom is completed by 2015, they will have close to 300,000 square meters of GFA for the office commercial buildings. Okay. So I won't go through the smaller companies anymore in the interest of time. Just want to note some of the CSR developments being undertaken by SM Foundation. So far this year, another 225 graduated from our college scholarship program, and there are another 1,300 scholars under the program in all different levels. Out of the 225 graduates, 92 were honor students. We have also donated about 12 classrooms to public schools. And then on the medical medical, health and medical front, we've done so far 68 medical missions with 72,000 beneficiaries. And under the livelihood program, we've conducted 14 farmer trainings benefiting 1,248 graduates. And so far on the Operation Tulong, this is more of the emergency response program of SM Foundation. They've served so far 39,780 families. The numbers below are much larger because these are the ones that they've done to date. No? So the most interesting for me is having more than 3,000 scholars, so far that has been aided by SM Foundation. Okay, so I'll end the briefing with that, and then open the floor to questions. But before I open the floor to questions, we have this very strong typhoon coming, no? So I just want to ask first the operating units in terms of what they're doing to prepare their assets, no, and their businesses ahead of the typhoon. Would you like to start, Jojo?
Well, we've asked our engineering group and maintenance group to stay behind the stores, no, starting tonight. And of course, we've advised our employees just to tune in to the AM stations in their localities, no, for any news from top management.
For our stores, Save More's, hypermarkets, and supermarkets, since 2 days ago they've stayed late open to allow the shoppers in the affected areas, Cebu, Iloilo, Bacolod, Davao, CDO, and Naga, to stock up on their own home supplies. That's the first thing. And our suppliers, together with our DCs, have already pushed forward the normal emergency SKUs that are normally looked for by those affected areas. We also have told our employees, employee safety is first and foremost. So we already have, as in previous calamities, our skeleton crews ready so that when the typhoon hits, our employees are safe, but we still have people in our stores making sure that things are still operational for the shoppers if there may be ones. We also have prepared, together with the mall, contingency plans such as extra gensets to make sure that if and when the typhoon passes, then we would still have electricity to power the stores so that it would be open in terms of comfort levels and in terms of the cashiers and things like that running full blast. We also have, as in previous practices, free charging stations for the cell phones. This has been already welcomed by the stores that the communities have been affected in the past. So these are all set up. This is all part of our ongoing business continuity program. And as in previous calamities, our staff, they're already, unfortunately, well prepared because of the past experiences that they've gone through. So.
Thanks, Joey. Are your stores all insured?
Oh yeah, with BDOI.
Yeah.
They're all insured.
Yeah, okay.
Definitely, yes.
Good. Jeff?
Well, as you know, in the past, the malls usually become like a center where people can actually take shelter during calamities. So we are preparing for that. We have medical teams on standby. We have actually also readied some sandbags to make sure that in areas where there are floodings, we'll be ready for that. We have cleared the roofs in terms of drainage, debris, to make sure that when the typhoon hits, the malls are okay. We also have done walkthrough in terms of operation, security, and the like, to make sure that the malls are ready for the consumers just in case they need shelter. We also usually allow people to park in our car park buildings to make sure that their cars are safe if needed. We have tested, as Joey have mentioned, our genset and make sure that we have enough fuel to actually run this genset in case of emergencies. We have also braced the trees and rolled up all the banners to make sure that this will not be damaged during the typhoon.
Okay, thanks, Jeff. And the banks, any preparations required? You have a lot of
Well,
branches.
we have our business continuity plans in place.
Okay.
So to the extent that we can stay open to provide services to our clients, then we'll do that. But in case there is interruption because of power outages or because telephone lines are down, then the next best thing is to try to be able to restore those as soon as we could possibly do. So, we have IT people who are on standby. We have our ATM crews who are on standby also to make sure that there is access to our ATMs and to our branches as much as possible.
Yeah.
I second the motion.
Okay.
Just as an additional input, even in the previous calamities, branch personnel have a standing instruction to report for work except when it is physically impossible, even if the branch is not flooded, but the way to the location is flooded, then they are not required. However, of course, the uptimes on the ATMs and especially for those who would need cash is a primary priority. And of course, the UPS in each of these areas are activated if the power is cut off. But of course, it's a limited time period. But otherwise, the standard business continuity procedures are in place.
Okay, thanks, Alex. Well, I mean, I just want to emphasize the fact that the whole group is really ready to serve, the communities that are affected. In the past, we've always had to wait for Mr. Shaw to release us from work, even at typhoon number 3. No, so this one is typhoon number 4. I don't know if Mr. Shaw will allow us to go home.
Just an update, in case you want an update of the weather, where is it going, what time, etc. Just access.
The mall,
there
yeah.
There is a website and a mall.
Yeah.
It's hour by the hour update. It's free.
Yeah, they have weather stations in the malls now. Do you know the website? But anyway, we'll give it to you later. So we'll now open the floor to questions, if there's any. Some of our friends in media are currently enjoying the cool weather in London. So, but thank you for those who are here for coming. Ian, do you have any questions?
The SEC actually has approved the merger last October 10, and we have informed the Philippine Stock Exchange about that. In terms of the actual integration, we have identified the people or the executives that will run the business units of the enlarged SM Prime.
Operations are in the process of being integrated.
We even went beyond that by assigning specific CFOs for each of the business units to make sure that the strategies and direction of
savings that
the
will come
SM
about
Prime
from
board
the
will be
integration.
done and executed properly. We are still in the process of integrating the operations, but in terms of coordination at the high level management, there is already coordination, especially in terms of leasing between, say, the malls that are leasing BPOs versus the commercial property group that are also leasing, BPOs on standalone buildings. In terms of full integration, I think you have to give us probably still about 6 months' time to make sure that all the units will be totally integrated and there will be no overlap of functions. So even the estimates in terms of savings will will come as we, fully integrate all the property units.
Okay.
No estimate.
Not yet.
Can I follow up? Yeah, it's still a proposed project, but it's still a proposed project, but it's getting a lot of attention. Can you just
I cannot hear you.
can you just share with us exactly the proposed reclamation land in Pasay? Where is it going to be located exactly vis-a-vis in relation to the Mall of Asia complex? Is it to the right, to the left, or is it going to be center? You're going to be adding, and if you can also share the rationale why it has to be, beside Mall of Asia and all that. So, thank you.
Well, if you're facing south, obviously it's to the right because that's the only area where you have that water, right? Yeah. So, but it's basically the one that's the water after Mall of Asia. Okay.
Fronting.
Yeah, no. After the San Miguel after the SM by the bay, you see those Ferris wheel, yeah, that
Yeah.
area. No. From the church side where what's the Microtel, from Microtel all the way to Vikings. So that's the area. Extension going into the water. Yes. So you reclaim more after the SM by the bay. Okay. Now it's actually a local government project, and what we have done is we submitted a proposal, unsolicited proposal to reclaim and develop those properties, and we just have to wait for their decision. If we're given the opportunity to develop that, of course we'll do that, with what is good for Pasay and its community in mind in terms of development.
Why beside Mall of Asia? I mean, you have a stretch, Manila Bay is a stretch, you could do the reclamation in another part, and you have another contiguous property.
Why not?
You want to expand all of that?
Yeah.
You just want to...
Well, it's basically the thing that we're already present in that area. So we wanted to extend so that we can do a more integrated development.
Okay, other questions? Krista, you had a question yesterday. Do you want to ask it now?
The SM disclosed that the company is acquiring a stake of CPI Asia 10 in 10 property companies. And there have been reports that this is the same stake of the Apollo Group in those companies. Can you confirm that? And why did you choose to invest in those property companies, sir?
Yeah, you're right. Apollo is the one that we signed the agreement is with CPI Asia. CPI is related to Apollo, so we are acquiring the Apollo shares. You're right. The second question, why we are acquiring? It's a part of our financial investment and the future growth potential for the group. So it's more of a financial consideration, financial investment, that it can add to the investment income.
Okay, other questions? Honey.
Hi,
Okay,
good
there.
morning. Just a follow-up on that question. With regards to the property that you have acquired, will that remain with SMIC or will that be also folded to SMPH?
It is SM Investment who acquired now. We'll see in the future whether it will be consolidated with SM Prime or will will stay in SM Investment, that will be an option by the management of SM Investment.
Hi, good morning. I was just hoping if you can give some color on the retail businesses in the third quarter in particular. The net margins softened a little. I was wondering, is it because of costs, meaning cost to renovate all these stores that you've been renovating, or is it something else? And maybe on the specifically on the food retail side, can you give us an idea what same-store sales is for that segment?
It's actually a combination of both. Yes, cost, because we have an ongoing renovation program. It's part of our store improvement program. Plus, we opened a bunch of new stores for Save More and for hypermarket. That's one. Two is it's also a reflection of the increasing competition in the Metro Manila area, which is fortunately offsetted by healthier competition outside of the metro. So it's a combination of those two things. Our same-store sales, I'm very happy to report, is because of the store improvement programs that we've had for all three formats, supermarket, hypermarket, and Save More. We are at, am I allowed to mention the numbers? Yeah? Yeah, we're at +4. So that's quite healthy, and it's above the normal industry numbers.
Okay, that's good news. So any other question? Jojo, did you want to comment? No? Okay.
Hey guys, can you provide color or rationale why SM Investment took that investment instead of SM Prime, given the announcement that supposed to be SM Prime will handle all the key strategic property assets now and to be acquired by the group?
Yes, Alex. Now, we are still looking at the returns, and also we look at the investment as a portfolio management fund. It's portfolio fund management rather than an operating company. It's a JV, and it will still be managed by the existing partners. So that's how we see it. It's not like as if we're going to take over.
Actually, if you talk of whether SM Prime or SMIC, SM Prime actually had a look of in that investment also. But since we're doing the merger and we have certain like return criteria also that we wanted to achieve, we decided that SM Investments would be the best vehicle at this time because of it being like a financial investment. But it will not prevent us from actually acquiring that in the future once the returns of SM Prime are met.
Yeah, Ian.
But I'd like to emphasize that we respect our existing partners, and we think that there's very good management. So we'd like to keep them there, and we'd like them to run the business.
Yeah.
As of today.
Okay. Can you please use the mic?
I would like to get more details about these companies. Each of the 10 property companies are single asset company, and then each of them own buildings?
You are referring to the companies that we acquired?
Yes, sir.
Yes.
Yeah.
Each company has its own asset.
It's single asset, like one
or
building?
Yes.
Yeah.
One company, either they own a land or a building.
Building.
Yes.
And all the assets located in Bonifacio? Or?
Yes.
Exactly.
Yes, it is located.
Which part of Bonifacio, sir? The fringes, or we're talking about the center?
It is. What is the name of the building there?
To be clear, the 10 property companies that we acquired comprises, 5 of them are buildings and 5 of them are property. It's structured that way. Okay. Net effect, it's actually 5 buildings in Fort Bonifacio in the PESA zone.
Okay.
Or
and if
call it PESA zone? PESA IT zone.
And if I total the property you have here in SM Ora plus this, how big of an exposure do you have to the total?
Oh, we have not looked at that. We looked at it from the point of view of investment, not in terms of how big or what size we have here in Texas. No.
It's very small.
Minimal.
It's very minimal.
Yeah.
It's very minimal.
But
of course, the minimal depends on from your eyes. Whose eyes?
Minimal enough to make some people just uncomfortable.
Ah.
Yeah. Okay.
We did not see it from that point of view. We looked at it from the investment point of view. If it makes economic sense, that's the reason why we're there.
Yes, Carol.
Hi. Are you at, this is still, the question is still connected to the CP acquisitions. Are you at liberty to tell us now the value of, or the purchase price of the acquisition?
No, the purchase price will still being determined. It will be finalized at a certain date. No? So
We understand that the total leasable area of those 5 buildings would be something like 147, 148,000. When you acquired these companies and you treat that as the entire, say, the entire asset base, your stake in that company is 100%?